What's worse than having to do a tax return every year? Doing 5. And that's exactly what's coming. From 2026, over 1 million taxpayers will have to file tax returns 5 times a year. But most people still think it's just once. So let's break it down. MTD stands for Making Tax Digital. It's HMRC's long-term plan to move everyone from doing one big tax return a year to a fully digital quarterly reporting system. So it's basically their way of saying that they don't trust spreadsheets anymore and they want the data in real time throughout the year. From April 2026, MDT for income tax will become mandatory for self-employed people and landlords with gross income over £30,000. That's the money that you've earned before your expenses are taken off. So that means if you're a sole trader or rental income earner pulling in more than 30 grand a year, this isn't something that's coming in eventually for you. It's on the calendar and it's creeping closer than most people realise. As part of it, you'll need to use MTD compatible software, submit quarterly updates to HMRC, and then submit a final declaration at the end of the year. So you're going from one big tax return to 5 smaller ones. But each one has deadlines, rules, and penalties if you miss them. That's not all the changes that they've got planned though, because HMRC has hinted that once the system's sorted for those earning 30k and above, they plan to lower the threshold and expect those earning between £10,000 and £30,000 to be brought in sometime after 2027. Then, eventually, even partnerships and limited companies will be included. So this isn't just a sole trader and landlord issue, it's the beginning of a much bigger shift on how income is reported for everyone in the UK. If you're used to paying your accountant just once a year, then this might come as a bit of a shock to you, because 5 submissions means more admin, more software, and more support. So yeah, the fees are going to go up. And that's not them being greedy, it's HMRC forcing them into a corner. But here's what's not changing. The actual deadline for the end of year return and the way that you pay your tax bill are exactly the same. You'll still pay once a year on the 31st of January, just like before. It's the reporting that's changing and becoming a whole lot more demanding.